Welcome to Fable and Fact. We're diving into one of the hottest topics on the investment scene, lessons from Warren Buffett, how to invest in uncertain times. In a world where markets are wild, tech stocks are crashing, and economic uncertainty feels like it's lurking around every corner, who better to turn to than Warren Buffett? Known as the Oracle of Omaha, this guy's been crushing it for decades, building a fortune while dodging financial disasters like a pro. Today, we're unpacking his life, his legendary investment strategies, and what they mean for you, especially now when things feel a little shaky out there. Buckle up, because this is going to be a wild ride through the mind of a billionaire who's seen it all. Let's kick things off with where it all began. Warren Buffett was born on August 30th, 1930 in Omaha, Nebraska, right smack in the middle of the Great Depression. Picture this. The stock market's tanked, people are losing jobs left and right, and his dad, Howard Buffett, a stockbroker, is trying to keep the family afloat. Howard later became a U.S. congressman, so Warren got a front row seat to both finance and politics from the jump. But even as a kid, this guy was different. At 6 years old, while other kids were playing with toys, Warren was out selling chewing gum door to door, buying packs for $0.25 and flipping them for double. That's some next-level hustle. By age 11, Warren took his first swing at the stock market. He teamed up with his sister Doris, pooling their cash to buy 3 shares of City Service Preferred at $38.25 each. Now, this wasn't some casual bet. He went all in with every dime he'd saved from his paper route. At first, it looked like a disaster. The stock plummeted to $27 and Doris was not happy, giving him an earful. But Warren held tight, and eventually, it bounced back to $40. He sold for a quick profit, only to watch it skyrocket to $200 later. Talk about a rookie lesson. That moment drilled 3 big ideas into his head. Don't sweat the buy price too much, focus on long-term growth, and tune out the noise. Those nuggets stuck with him for life. As a teenager, Warren's money-making game only got stronger. He delivered newspapers, sold golf balls, and even teamed up with a buddy to buy pinball machines, sticking them in local businesses and splitting the profits. By 15, he dropped $1,200, serious cash back then, on a 40-acre farm, renting it out like a mini real estate mogul. 5 years later, he flipped it for double. When he graduated high school, he'd saved up $9,800, which, adjusted for inflation, is like $500,000 today. The guy was a walking ATM before he even hit college. Speaking of college, Warren started at Wharton, but transferred to the University of Nebraska to stay close to home. It was there he stumbled across The Intelligent Investor by Benjamin Graham, a book that flipped a switch in his brain. After graduating, he applied to Harvard Business School, got rejected, and instead landed at Columbia under Graham himself. Graham, the godfather of value investing, became Warren's mentor, teaching him to hunt for stocks trading below their true worth. That's where Buffett's journey really took off. So, what's this value investing thing all about? Imagine the stock market as this moody dude named Mr. Market. Some days, he's hyped up, throwing out crazy high prices. Other days, he's down in the dumps, practically giving stocks away. Graham's trick was to ignore the mood swings and focus on a company's real value, its intrinsic worth. If Mr. Market's having a bad day and the price dips below that value, bam, you've got a deal. Buffett soaked this up like a sponge. After Columbia, he worked at Graham's firm, sniffing out bargains like Geico, an insurance company that became a gold mine. In 1956, Graham retired, and Buffett headed back to Omaha with a plan. He scraped together $105,000, mostly from family and friends, and launched his own investment partnership. Over the next decade, he crushed it, averaging over 20% returns every year while the market was flat or tanking. By 1969, he'd turned that modest start into millions and shut down the partnership, ready for his next big move. That's when Berkshire Hathaway entered the picture. Berkshire was a failing textile company when Buffett scooped it up in 1965. He didn't plan to save the textile biz. Spoiler, it kept losing money. But he saw it as a shell to hold his growing empire. Early on, he started buying insurance companies like National Indemnity in 1967. Why insurance? Because it gave him float, cash from premiums he could invest before paying out claims. It's like getting a free loan to play the market. That float became the rocket fuel for Berkshire's growth. Then came Charlie Munger, the game changer. Buffett met Munger in 1959 through a mutual friend, a doctor named Edwin Davis. Munger, 6 years older, grew up just blocks from Buffett in Omaha, but took a different path. Math at Michigan, the Army during World War II, then law at Harvard. By the time they met, Munger was a successful lawyer in LA, but Buffett saw something special. The two hit it off instantly, talking for hours like old pals. Munger wasn't just smart, he challenged Buffett to rethink his game. See, Graham's style was all about cigar butt investing, grabbing cheap, beat-up stocks for one last puff of value. Munger said, "Nah, man, stop chasing scraps. Buy amazing companies at fair prices instead." That shift was huge. Take See's Candies, which Berkshire bought in 1972 for $25 million. It wasn't cheap by Graham's standards, but Munger saw its brand power and steady cash flow. Decades later, See's has pumped billions into Berkshire's coffers. That's when Buffett's roll the snowball idea kicked in. Find a great business, buy it, and let it grow bigger over time. Now, let's talk about some of Buffett's biggest wins. Coca-Cola's the poster child. In 1988, after the '87 crash, Buffett started snapping up shares. He loved its global brand, loyal customers, and predictable profits. Berkshire now owns over 9% of Coke, raking in $700 million in dividends yearly. Imagine winning a $500 million lottery every day for 2 years straight. Then there's American Express. Back in the 60s, a scandal tanked its stock, but Buffett saw the brand's staying power and jumped in. Another home run. Fast forward to 2016, and Buffett shocked everyone by betting big on Apple. Tech wasn't his thing until he saw Apple as a consumer powerhouse, not just a gadget maker. By 2023, Berkshire owned over 900 million shares, worth a fortune as Apple's stock soared. But in 2024, he trimmed that stake by 2/3, banking profits and bulking up cash reserves. Why? He told shareholders he's eyeing global risks and high market valuations. Smart move. 2025 kicked off with tech stocks, including Apple, taking a nosedive. That brings us to today. By late 2024, Berkshire's cash pile hit $334.2 billion, 28% of its assets, a record high. Buffett's been selling stocks like crazy, and at the May 2024 shareholder meeting, he dropped a bombshell. He's retiring by year-end. He didn't hold back, slamming U.S. trade policies and warning the dollar could tank. "We won't invest in any currency headed for hell," he said. Analysts are buzzing. Does he see a crisis coming? Looking back, he's pulled this move before. In 1998, cash spiked before the dot-com bust. In 2005, it peaked pre-2008 crash. In 2020, he was ready when COVID hit. The guy's got a sixth sense. So, what's Buffett's secret sauce? It's not just luck. His famous line, "Be greedy when others are fearful, and fearful when others are greedy," is his North Star. He waits for Mr. Market to freak out, then pounces. He's also obsessed with what he calls his circle of competence, only betting on stuff he gets. Plus, he's patient. Coca-Cola held it 37 years. BYD, the Chinese EV giant, 14 years with a 40x return before cashing out in 2022. Most of us would have bailed at the first dip. But let's zoom out. Is this old-school value investing still legit in 2025? Critics say no. Growth stocks like Tesla and Amazon rule now. Fair point. The Nasdaq's up from 300 points in the 80s to 17,000 today, while Buffett's missed some tech waves. Yet his fans argue his core ideas: buy quality, hold forever, keep cash handy, never go out of style. When markets crashed in early 2025, S&P 500 down 18.9%, Nasdaq off 23.87%, Berkshire's stock held strong, proving there's something to this. What about his personal life? Buffett's a paradox. He's worth billions, but still lives in the Omaha house he bought in 1958 for $31,500. His first wife, Susan, called him a socially awkward genius who couldn't fend for himself. They hit a rough patch after 25 years. She moved to San Francisco in '77, leaving him with her friend Astrid, who later became wife number 2. Susan stayed close till her death in 2004, and the trio's unconventional setup was an open secret. Even in love, Buffett's a maverick. Then there's his take on wealth. In November 2024, he donated $11.4 billion in Berkshire stock to family charities, vowing to give away 99.5% of his fortune after he's gone. His kids get just 0.5%, enough to live well, not sit around. In his latest shareholder letter, he wrote, "The real power of wealth shows up in your last 20 years. It's vintage Buffett. Focus on the long game, even with money." So, can you copy the oracle? It's tough. Valuing companies takes serious skill. Buffett spent decades reading reports, visiting factories, and trusting his gut. Holding stocks through chaos? That's anti-human nature. And he's thrived in a rising U.S. market. Try that in a flat one, and it's a different story. But there's hope for us, regular folks. Stick to what you know, avoid the hype, and save some cash for when the market panics. That's Buffett 101. As we wrap up, think about this. Buffett's turned a dying textile firm into a $1 trillion beast with just 26 people at HQ. His snowball's been rolling for 60 years, and it's massive. Whether you're a newbie investor or a pro, his advice, invest in yourself, might be the golden ticket. Learn, grow, and play the long game. Thanks for hanging out with us on Fable and Fact. If you loved this deep dive into Warren Buffett's world, smash that like button, hit subscribe, and ring the bell so you don't miss our next adventure. See you soon, and keep investing smart.